Right, okay. Hello, everybody. Hi, this is me, that is Charles from Easy Markets, just fixing my headphones very quickly. Hey, there we go. Now we can start. Look, this is the Daily Pitch International breaking news section, which we deliver here at Easy Markets, and we produce these little shorts, separate videos where I want to pick up on a few economic data sets, particularly one, to kind of dedicate this one video for that economic event, because in my opinion, that's quite important and people should not forget about it. So today I'm going to pick up on the Japanese inflation numbers, which are coming out, well, on Friday. So I'm recording this one on Thursday, so those are coming out on Friday. So hey, we're going to look at that. Before we jump into any of that, we need to have a quick read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So basically, yes, we are having these numbers in general. This whole week we're having the CPIs everywhere, apart from the US. But yes, we're having these UK CPIs, Canadian CPIs, we're getting Eurozone CPIs, and we're getting, of course, now Japanese. So also, before we jump into all that data, let's quickly just mention the Easy Markets website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So right now then, let's have a look. What am I talking about in general? Why am I recording this video? Basically this right here. So the headline inflation year on year is expected to, well, actually there's no expectation. The previous number came out at 2.5. What's interesting here is the core rate of inflation. Now, the previous number at 2.5, maybe we could get this one a little bit on the higher side, maybe let's say 2.6 or something like that. But to be honest, I don't know. Maybe it could come out at 2.5, the same as previous. But the core is expected to decline. Now this is where the interesting bit comes in. So why the headline is it could come out the same or maybe a little bit higher just because of oil. Because we saw headline numbers from many other countries this week, and all the headline numbers were kind of on the higher side. Core were also on the higher side, but you see Japan is a little bit on a different side, so that's why with the core I do agree. Maybe we could see some lower side. We could see some lower numbers, maybe even a drop below the 2.2 to be honest. But the headline number here, I think that maybe it could actually stay somewhere the same, just because maybe food and energy managed to keep it from dropping. But the core number, now that's, like I said, that's where it's interesting. In my opinion, maybe that we could even see a little bit of a move to the lower side. So if that's the case, then we have a problem with the Bank of Japan, because Bank of Japan said recently that Mr. Ueda said that they're still examining the opportunity for hikes, but for rate hikes. Not for rate hikes, but they're examining the rate hikes in general, not four, no, not number four, but just in general, the rate hikes. I think that this could be a bit of a problem if inflation continues to slide, especially the core. Then there is a bit of a problem to justify any potential rate hikes. And why they're looking for some rate hikes? Well, mainly because of the Japanese yen. Because look, the Japanese yen has been weakening since mid-September, and we're getting already closer to December, and has been weakening basically again, because this year we saw like 3 times the same problem. I think even more. Let me just adjust this very quickly. So 2024, there we go. We had a rally. So basically just a quick recap of this 2024 situation. So we had a rally. Japanese yen was weakening. We were already panicking when it was like reaching 150, and then there was an intervention. Then we picked up here again near the 146, and when we started rallying and everybody was panicking, then we have an intervention again, and we corrected, and then it pushed again for this is what everybody's afraid of, that maybe we'll push again to new highs, maybe we'll overcome this 162 territory. I mean, I somehow doubt it, but I think that yes, the fact that we're getting elevated here again, that's a bit of a problem. And Like I said previously in my one of my webinars, look, now this rally which we're seeing from the mid-September, I mean, it seems like everybody forgot about it, and everybody's like, yeah, Japanese yen devaluing. What else is new? And I think that this is what what they're trying to do right now is they're trying to stabilize the yen, but they're struggling with that. So they cannot hike rates because inflation doesn't give them the like a justification to do so. We're seeing inflation kind of being a little bit on the lower side, but they want to, and basically if they could hike rates, they could stabilize a little bit the Japanese yen, maybe. But also in this case here, we have the stronger US dollar, which also rallied from around here. So this combo is not really working out well for the domestic consumer, for the Japanese domestic consumer. Overall, of course, yes, congratulations. We're improving our trade balance in this case. I'm talking about the Japanese trade balance. We're, increasing our exports. But the thing is that you cannot run this like this forever because otherwise you're going to spiral into some bigger problems. And just economically, your country might, suffer a downturn. So that's why the Bank of Japan is keeping this on very carefully. The government, Japanese government, is also keeping the close eye on the yen. This is one of those moments where, for example, if you compare the central banks like Japanese Bank of Japan and Bank of Canada, where Canadian dollar is also like devalued, but they don't care. They just continue cutting, and they're trying to boost the spending somehow, in order to maybe lift inflation later on. But yeah, it's like let's forget about our currency for now and let's focus on the spending. Whereas in Japan, it's kind of a little bit different. So the consumer is a little bit more cautious, and that's where it doesn't work. Everything doesn't work the way it works in the like Western countries. So long story short, for now, we are, like I said, at an interesting spot. I think that there could still be some more upside on this one. I'm still targeting the 78.6 here on the Fibonacci retracement, which is drawn from the highest point of July to the lowest point of September. Like I said, I do like this area, and then I'll go from there because in general, if we start clearing this, well, then we're not far from the highest point of this year, near the 162 zone. But if we start clearing, the 162 territory, then basically this is where bigger problems could start. So. Yeah, ladies and gentlemen, honestly, I think that this is a moment where we need to be very careful, very cautious right now. There is potentially some weakness in the Japanese yen, but I think that what also the government and the BoJ and the Japanese government are thinking of, and how they're hoping, I think, in my opinion, that they might just win some time until the stock market starts correcting itself. Why I'm saying that? Because then people will start jumping into the Japanese yen, and we could see, USD JPY correcting nicely to the downside. So again, it's a bit of a risky moment because we don't know if the stock market is like finished with its rallies, because we saw a bit of a retracement, but it doesn't mean that you cannot pick up here again. For example, this is the Dow Jones Industrial Average, or the S&P, for example, here. It doesn't mean that we could not push again for the upside. We're in the holiday season, so. And in general, everybody's like enjoying the Trump trade. So yeah, for now, like I said, there's a lot of factors to take in, a lot of timing issues. So, like I said, the BoJ and the government maybe are thinking about the fact that maybe this will stabilize itself naturally just when the stock market starts correcting lower. But if it doesn't, yeah, I think that they will have to think of something, because if we're going to start clearing 160 mark. Yeah, I mean, I think that's going to be a bit of a problem. So, ladies and gentlemen, what I would like to say here right now is that thank you very much for watching this. I really appreciate that. I hope you enjoyed the I hope you enjoyed this session. I just wanted to quickly share my thoughts and my opinion about this. So let's see how this is going to play out and work. For now, I am, like I said, I'm observing the situation. And this is not a recommendation or, let's say, to buy, sell, or something like that. No, this is for you to apply this to your own strategy if you are trading, for example, something Japanese related, Japanese yen related, just to understand what's happening currently and what to potentially expect. So I hope that helps. So thank you very much, and I shall see you next time with some more daily Pitch International breaking news segments here on Easy Markets. So yes, do not forget to like and subscribe, the usual stuff. So yes, subscribe in order not to miss any of these upcoming videos. And yeah, I hope you stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye bye.